Yes, let's continue with our indicators that can help us to enter into the market without waiting for signals, whereby you can do this simple analysis and enter into the market and take a 1.5%, a 2%, or a 3% according to the time frame you are using to make an analysis to the market. What I recommend is that you always use a big time frame, at least 1 hour, in order not to get a fake signal. You can use 1 hour, and when you use 1 hour, take at least a 2%. Remember, this is a short analysis. And using these indicators, what I want to warn you is that we don't use one indicator to enter into the market. We always use a group of indicators. Like 2 indicators can be enough to show us the way to predict this market, the movement of the market. So this is Bollinger Bands. Bollinger Bands are technical analysis indicators, or are indicators used in technical analysis to measure the volatility of the market and identify trading opportunities. So Bollinger Bands have different behaviors. One, they have 3 lines. They have the middle band. The middle band is a 20 moving average. The middle band is a 20 moving average, as you can see. Then the lower band is a 2 standard deviation from the middle band, a 2 standard deviation from the middle band, and the upper band is a 2 standard deviation from the middle band. That is the standard setting of this indicator. What you need to first know is that the Bollinger Bands, they form what we call a shrink and a bubble. During the shrink, it indicates areas of low volatility. Like for example, this was not a very much shrink, but you can see that the price was moving in between the bands. It wasn't going beyond. It was moving in between the bands. So during the shrink, it will indicate periods of low volatility. Then after period of low volatility, we expect higher volatility. Higher volatility can either be on the downside, it can either be on the upside. Like for example here, after the shrink had happened here, you can see that when the higher volatility came in, it pushed the market down, as you can see, with large volume. So these bands, as we have said, that they represent, they are used to measure the volatility of the market. Then they will show you that during this trading period, the market is having low volatility. During this period, the market is having higher volatility. So, and you choose accordingly. Can I trade during areas of low volatility? No. As a trader, I would like to trade when the market is on higher, or when the market is having a higher volatility. So after identifying that, write it down that the indicator, this Bollinger Band, it forms a shrink and a bubble. Let me look for another shrink and see if we can get it here. So we can call this a shrink, that they were contracting here. You can see that price action is not decisive enough. Candles are not forming with the volume. So that means that the market was in area of low volatility. I can lower the time frame in order to get a good picture of a low volatile market, and I give you that example. This coin is performing good. It doesn't have those shrinks. But I believe someone has picked a point that during areas, the Bollinger Bands can show you that this area is an area of low volatility. This area is an area of higher volatility. How? That the bands expand during areas of higher volatility and they contract during areas of low volatility. Then another use of this band is that they can indicate dynamic support and resistance. This is for beginners. when you go to advanced level, we wouldn't want to use Bollinger Bands as support and resistance. But for beginner, you can use Bollinger Bands to show you what we call a dynamic support and resistance. When the market approaches the lower band, it has approached a period, it has approached an area of oversold, over a region which is oversold. When I'm talking about RSI, I'll talk about oversold and overbought. But to give you a little view that when an asset is oversold, that means that buyers have been sellers have been selling this asset, pushing the market down until the lower point. There is that lowest point which the market cannot penetrate down to continue further. It is called an area of oversold, where we expect buyers to come in and regain control of the market. Then this area up is called area of overbought. Buyers have been buying and they have started taking profit. When buyers start taking profit, you will see the market moving down. So when the price action approaches the lower the oversold region, when the price action approaches the oversold region, that is when someone who is trading in the spot market will enter into the market. We are looking at what we call a free bar. When you want to make a perfect signal with the Bollinger Band, you have to wait for what we call a free bar. A free bar will indicate reversal. Will indicate the reversal. Like for example, this is an area of oversold, but we have not got confirmation that this market is going to reverse upwards. But if I was trading in futures and I find a perfect free bar here, the free bar trading system, I find it that a bar has broken out from the Bollinger Band and it has formed above the Bollinger Band independently. Chances are high that a reversal is going to happen. So if for us who are trading in the spot market and you find such a free bar here down, then you just enter the market because we are on sure deal that it is going to reverse on the upside. So let's take for example and look for a free bar. Like for example here, this was a free bar. This one here, this green candle here was a free bar. It formed below the Bollinger Bands. So these Bollinger Bands work on an assumption called a mean reversion. Mean reversion means that whenever a price action moves away from the mean, it will come back and test that mean average before it continues in any direction. Like for example, we are looking at this market reversing to the middle band. So if you enter on this candle here, on this free bar, you can see that a red candle formed, but that red candle will be absorbed by the margin calls. Remember, when trading with Rachel, we always get a provision of the margin calls. So this green candle, this red candle that has formed will be absorbed by the margin calls, but the market will move up because we have seen a free bar forming. So with screen time and practice, you will find that whenever the market approaches the lower band and a free bar is forming, this free bar will act as confirmation that this market will reverse to the upside. As you can see, that after this free bar forming here, this was a doji forming, it is moving up. As you can see, the market moved up. So if you entered on this bar after seeing that this bar has formed and completed, you enter, you take your first buying amount here immediately. Then by the time the market reaches here, you're already out of the market. So I'm showing you only one way because we are dealing with the spot market, and in the spot market we are buying low and selling high, rather than in the futures market, whereby if I find a free bar like this one here, I'll take a short position that the market is going to move down, and I will have made money on that position. But with the spot market, we are predicting one direction of the market. We are buying low and selling high. I'm using a 1 hour time frame to show you this. So these are the lines, the Bollinger Bands can, one, act as a dynamic support and resistance. Two, it can show you areas of overbought and oversold. Remember, as a trader who is trading in the spot market, you will have to enter into the market when the price, when the asset is oversold. But if you are trading in the futures market, you can enter when the price, when the asset is overbought or when it is oversold. You take a short when it is overbought, you take a long when it is oversold. I don't want to confuse you with that, but what you need to know, that when the price approaches the lower band, it is most likely to reverse to the upside. So get your coins prepared, get your trading principles prepared. That I'm trading Bitcoin, I'm like 10 coins, you list your 10 coins, then wake up in the morning, do analysis on those 10 coins using either 15 minutes or 1 hour or 4 hours. So when you find a perfect entry, you enter into the market. You enter into the market and take your profit. So I can enter with this candle here, or I can enter down here and take my profit in the middle band, on the middle band here. Remember, when you have not advanced into technical analysis, please make sure you take little profit so that you get out of the market. And by the time you perfect this, enter into the market with a higher buying amount, first buying amount, so that you can take your little profit and get out of the market. Then do the dollar cost averaging later, just in case the market don't respect your analysis, so that you can be safe with the coins. So this is the little analysis you can do. Remember, I told you we don't use one indicator to enter into the trade. I'll need another indicator that will show me confirmation. So just to take a point here, I don't want to make this video so long, but when the price approaches the lower band, one, look for a free bar. So if the free bar does not form, two, look for a green candle. The green candle will give you confirmation. A free bar is a bar that forms below the Bollinger Bands independently. It has formed independently below the Bollinger Bands, like I showed you in the first example. So after entering, take your profit on the middle band. So when you want to enter using the middle band, you'll have to maybe this will be another video that will show you how to enter using the middle band. But for this example, for this video, let's first stick to the lower band, that I'm entering on the lower band, that after the market approaching the lower band, it is expected to be supported, and once it is supported, it will move in the upper direction. So let's take that for today. Please rewatch the video so that you can understand what we have talked about in the video, and you can start entering into the market without waiting for anyone to give you the signals. Thank you for watching. My name is Bashir. See you in the next video. Make sure you subscribe to this channel.